Hey everybody, Chuck Barone here. Wednesday, January the 18th, 2023. A little bit funky show today, guys. I'm recording this a little bit earlier than usual. I promised some friends today I would help them with some labor. That's why you see me dressed way more casual. You don't want to be wearing a jacket and a tie to do that kind of work. But anyway, we wanted to get a show out. I don't want to be skipping any more days, especially when the markets are open. So here we are. As always, we want to thank you guys for being here, for watching the videos and supporting the show. We appreciate you guys. We hope you're enjoying the show. Markets today down. Not a great day for the markets. We had crappy retail numbers, especially for December. We have big recession fears now that the interest rates are starting to bite. We have some crappy earnings coming in, especially Goldman Sachs, Morgan Stanley, and some big Wall Street banks, and leading the banking parade down with less earnings now. Stocks starting to feel like the Fed may overcorrect. I don't know if we're there yet. Markets, like I said, I've been warning you guys this. You're going to get day-to-day gyrations in these markets. It's completely data. The daily data comes out, and then the different interpretations of that data driving this market all over the place. It's really hard to get any kind of rhyme or reason to it, especially when the numbers come in like today's P.P.I. number did. Again, so the P.P.I. number comes in, surprising number, drives stocks down, although I would have thought a rally would have been happening here. And but you know, the other data, especially the retail number, weighing down. It looks like the economy started to not do so great. Manufacturing down again. So the recession fears now overtaking inflation fears for today at least. In the meantime, bond market rallies. I guess they're figuring the Fed's pretty much, their job is done, even though the numbers aren't quite where we want them yet. So the bond market rallies like crazy. 10-year down 16 basis points, 3.37%. This bond was just over 4%, like not very long ago. So this bond market, man, just doesn't know which way it wants to go. The 2-year dropping 11 basis points, 4.07. So now the spread widening again. You got about a 70 basis point spread in this inversion here. Bond market looking really weird. And, you know, this market, we'll see what tomorrow's data makes the market do. It's crazy. Dollar flat today, really no change. Down 0.4%, 102.42 on the index. Nothing new there. Metals down today, surprisingly. I thought with a flat dollar, but I guess these inflation numbers spooking gold and silver. People taking some profits. We've had a nice run up. Right now, gold, $1904.50, down $5.20. Silver, $23.44, down 47 cents. Still looking pretty strong. I'd like to see silver get back above 24. I like gold above 1900. I think you're going to see gold 2000 coming soon. Silver 25, no problems. I think these numbers are coming. We'll see how long it takes to get there. Oil today down about 90 cents for a barrel of West Texas Intermediate. $79.22. A little more relief, hopefully coming soon for all of us at the pump. Oil prices have been kind of gyrating again back up a little bit, but I don't really see the big demand coming. Maybe when the springtime or when driving season starts back up, you'll see another spike in oil, but I think we're on the drift down till then. Bitcoin today down $566, but after that huge rally, there's got to be some profit taking. $20,745. Bitcoin rally is still alive and well, even though not today so much, but strong number for Bitcoin. Today, the big news, the P.P.I. shocker. Big decline in P.P.I. Down 0.5% month over month versus a 0.1% estimate. That brings it to 6.2 year over year. A big come down. Was over 10% earlier this year. It's the lowest number we've had on P.P.I. since March of 2021. Further evidence that these rate increases in the slowing economy is having the effect on inflation we wanted to. As I explained yesterday, consumers fighting back against this greedflation, corporations jacking up prices just because they can, leading to now companies being a little more cautious with their price increases. This number is a good indicator for the economy, guys. I know nobody's going to believe these government numbers. The bottom line, though, is these are the numbers we have. These are the numbers the stock market is going to move. That's going to move this market. So these are the numbers we use, right? I'm sure there'll be some debate about what the real inflation numbers are. This number, the core, this is kind of a misleading one because, gas, energy, oil, gasoline, energy prices, food, which we've all seen shoot up, those are huge drivers of this inflation, up and down. Well, we're seeing those prices start to moderate, oil coming down, food prices for some stuff starting to come down. Not so much for eggs or butter yet, but it's interesting because this big decline was a shock to the market. At the same time, though, core P.P.I. was actually up 0.1%. Now that's core always is prices excluding food and energy, right? So the inflation's still there. The numbers do look better. Let's give credit where it's due here, guys. But this tells us going forward. This is why I like looking at P.P.I. numbers, because it'll give us an indication. This is the producer side, so production happens before the consumers get to buy it, right? So if production prices are not rising as fast, those increases are coming down, typically CPI is going to follow. So we'll probably see further declines depending on, of course, food and energy. If those things remain even remotely stable, we'll probably continue to see CPI coming down. This PCE that the Fed follows, this personal consumption expenditure index, even lower than these numbers. So I think the Fed is on target. I think that we can rest assured now we're probably going to see a further ratcheting down of the rate of increase. We'll probably get we believe we're going to get a quarter point. The February 1st open market committee meeting. Interesting stuff happening, right? At the same time, though, as this inflation good news comes, here comes bad news on retail sales. December is usually a very good month with the holidays. Well, they were expecting retail sales to decline 1%. They went down 1.1, which apparently was enough to shock the market into believing this is a recession. I guess they were expecting a small gain, but the decline was a surprise. I think that retail sales still rose 6% year over year. Not a great number, especially with year over year inflation at 6.5%. But I think this panic today in the market over this number is kind of overblown. Everybody understood that with prices going up, it cost a lot more money just to buy the same stuff, so adding on more was unlikely. I think that this number shouldn't be a shocker to any real economist who's paying attention. So here we sit. Markets today started off looking like it was going to be a nice day, cratering down at the end. Tomorrow's another day, though. More data tomorrow. Tomorrow we'll get jobs numbers. That'll be interesting. Before we go, though, I wanted to talk about this survey I was reading through. Very interesting stuff about the middle class. As everybody knows, I'm a hero for the middle class. I love the middle class. Those are my people. I call them the schmuckatellis, because we're the poor schmucks that get to pay for everything. The wealthy people have their people. The poor people, the immigrants have their people. We got our nobody. We get the bill for everything else. Well, the middle class is starting to feel the effects of all this poor government. 72% of the middle class say that their income is not keeping pace with prices. 72% of the middle class struggling now to keep up with prices. 74% of the middle class say that right now they cannot save money. price increases, lack of extra income, whatever the reason, 74% of the middle class said they can't save money. Not good. That's up from 66% just a year ago. Only 50% of the American population, households, now qualify as middle class. It's the lowest number it's been in a long, long time. It's actually, 50 years ago, 1970s, during the last inflation and Nixon and Watergate, and 72, 50, or 73, I guess would be 50 years ago. 61% of the American population was in the middle class. That's a pretty dramatic decline, almost 20%. Sad news for the American way of life. It's time for us to wake up, guys. Everything is so skewed toward the wealthy, the corporate world, big business, and the middle class, us poor schmuckatellis. What we end up with is the blame and the bill usually, right? 59% of the middle class surveyed said that they believe their kids will not have a better life or better income than they had. That is really, really disappointing. I think that's the goal of every parent. They have children. They want their children to have a better life than they had. They want to do the things that to do, educating their kids, trying to do the things they can do to raise them, to prepare them for this world to have a better life than they had. I think that's pretty much the goal of every parent. To hear that almost 60% of them believe that their kids will not do better than they did. I don't know if it's just the mood right now with this crappy government, crappy economy, crappy everything in society, it seems like. But those are some very, very distressing numbers right now, guys. Anyway, that's it for today. I'm off to do labor. We appreciate you guys, we really do. If you like what you're hearing, hit the like button, share the video with your friends, ask your questions in the comment section. We'll be back tomorrow. Big data coming tomorrow. It's actually a big data day. We'll wrap up everything we missed today. We appreciate you guys as always. Until we talk again tomorrow, take care. Thanks.